Hello again, everybody. Kyle Broda here from FullSkillsExamPrep.com. Welcome to your second sample question in the Immigrant Investor Venture Capital Pilot Program series. As always, most people like these videos just because it really helps you to relate the eligibility requirements with questions. It's always more interesting to look at the eligibility requirements through questions rather than just reading it by itself. But of course, it's important to read everything that you can, really, especially in a topic like this, just because it's pretty small, pretty straightforward as well, and hopefully it'll take you just maybe 1 or 2 or 3 hours to study this topic, and then you can cross that off your list. So if you get a question in your exam on this, you'll be pretty happy. If you've been watching our video series, you know that we're updated, of course, as soon as something crosses that 90-day period where it's likely to be on your ICCRC Full Skills exam. Remember that we have got you covered, of course. If you're following along with your test day data book, page 30 has got you covered. In the seminar, we cover this topic as well. Okay, so if you remember this from the previous lessons, again, we're just going to go over this again and again and again, like I said, just because it looks pretty straightforward. It's not that big either of a topic, but if you get a good understanding of this, you're really going to be on the right track to passing your ICCRC Full Skills exam. All right, if you remember from before, we had those net worth requirements, the investment requirements, the language requirements, and of course, those educational requirements. So let's just jump right into your question now. We have Veronica here. Veronica is a Brazilian architect with 15 years of experience. She completed her bachelor's degree in the subject in Rio de Janeiro and studied at the University of Toronto for her master's degree before returning to her country. Now she is a mother and she feels that her 16-year-old daughter would have a better future in Canada, so she would like to move back to Toronto. Currently, Veronica and her brother are equal shareholders in their own architecture firm, which has been in business for 10 years. They have been involved in governmental contracts, and the company is valued at about $16 million, while her personal net worth is around $1 million. Would you recommend the IIVC program to her? We have our potential answers over there as well. So yes, she meets all the requirements. We have no, as she would not be able to be issued an ECA. We have no, as she will not meet the minimum financial requirements. And we have yes, if she breaks the partnership first in order to provide proof that she has the necessary funds. All right, if you feel like pausing the video to take a look at this question again, that of course that's not a problem, but we'll move on here. Of course, we have you covered as well with your test day data book. But in your mind, when you look at these scenarios, what you really want to do is take a look at the important parts of that scenario. So hopefully a few little sections of this jumped out at you and you think that they're important. Again, you can pause anytime that you want to really take a look at this. Hopefully some of these elements became pretty obvious for you. So they did talk about her education, which is of course one of those requirements of the IIVC. They talked about the business partnership, as well as her net worth. Okay, so with education, she has a bachelor's degree, as we saw. However, that extra little element in there is that she studied at the University of Toronto for her master's degree. So that is a very interesting element that we'll look at in a minute as well. When we're looking at her net worth, of course, we're looking at that business partnership as well. So she and her brother own the company and they're equal shareholders as well. So that plays a role in net worth, and we'll see this in a few minutes as well. And of course, they talked about her general net worth as well. So remember, these are all important elements in seeing if she would be eligible for the IIVC, and that of course would give you the answer. Okay, so when we take a look at this question over here, let's take a look at A first. So we have yes, she meets all the requirements. All right, so if you take a look at those requirements again, we have that net worth, the $2 million investment, the language, of course, and those educational credentials. What we're really going to concentrate on this one here is that net worth. So remember that it can be income or capital gains in this case. We don't really have to worry about her inheriting the money or anything like that in this case because it wasn't in the scenario. But one thing we have to really take a look at is capital gains. If you're curious about capital gains, you can see the definition right here. So it's a profit from the sale of property or of an investment, including shares or stocks. If you'd like a more thorough explanation, of course, you can take a look at the source over there. So when we take a look again at those important parts of the scenario, that part where her and her brother own the company as equal shareholders plays a very large role, especially when we think of the company being worth $16 million. So let's take a look over here. We'll do the math on this. So if she owns 50% of this company and it's valued at $16 million, it's likely that she would get $8 million from it. So she has $8 million in company shares. In real life, you never know if she could sell it for $8 million or not, of course, but in a situation like this is just to prepare you for your exam. In addition to that, she has her $1 million of personal net worth, giving us a total of around $9 million. So when we take a look at the $9 million, we compare it with the net worth requirements. Remember that the net worth requirements, of course, are $10 million. We can see that she doesn't meet it. So that, of course, makes A the wrong answer. We could cross that one off the list. Now when we move on into B, we get into that educational aspect because you can see right away that we talk about the ECA. All right, so when we take a look again at those main factors in her scenario, especially in terms of education, we see that she has that bachelor's degree, which, assuming that she would get the ECA, would far exceed the 1-year minimum requirement. But the important part in here, of course, is that she studied at the University of Toronto for a master's degree. And just from the language there as well, you can see that it says not for a master's degree, like I just said, it says for her master's degree, which you can assume that she graduated from, which helps you quite a bit in the question as well. So when we go back to eligibility, especially in terms of number 4 over here, which, if you remember from the previous lesson, is a Canadian post-secondary degree, diploma, or certificate of at least 1 year. And then the key is over here, of course, or the foreign equivalent validated by the ECA. So the tricky part in here is that with her, she doesn't actually need the ECA because she studied at a Canadian university and received a Canadian degree. So this, of course, means that B is not the correct answer as well. All right, so let's jump ahead over here to D. In D, we have yes if she breaks the partnership first in order to provide proof that she has the necessary funds. Then she would qualify for the IIVC. Let's explore this answer as well. Okay, so remember when we're talking about that personal net worth, as we just saw before, income or capital gains. So we took a look at that definition of capital gains again, as the profit from the sale of, in this case, it would be shares. And when we take a look at those main parts of the scenario, we can see again, as we just talked about before, I just want to go over it again just to make sure that we have it completely covered, that her and her brother are equal shareholders. This, of course, plays a role in her net worth. As we saw before, it makes her net worth $9 million rather than the $10 million that she would need. So even if she broke the partnership first, sold the shares, and made the maximum amount from them, which would be 8 million, she still wouldn't have those funds, the necessary net worth. So that makes D the incorrect answer as well. All right, so let's take a look at C now. No, as she will not meet the minimum financial requirements. So we just covered that a couple times already, and you know that that's the correct answer, of course, just from those two examples that we covered. Again, where we took a look at her net worth. She just didn't have enough net worth. All right, so with this one here, you know that that is the correct answer, of course. You have simulations like this in our books, so be sure to visit our website. Like I said, I'm Kyle Broda. A big thank you for tuning in and letting us help you as well. And of course, be sure to visit our partners. All of these people do a lot to help RCICs. If you visit our website, you can see exactly what they do, and they're all there to help you, just like us. Okay, so have a really great afternoon, and thanks again for tuning in.